and these are the points that we'll be discussing today. Just give it a second. Right, so we're going to cover the topic that we skipped in the previous session. We're going to cover the VAT posting groups and the VAT posting setup, discuss what is full VAT, and then we're going to discuss about the chart of accounts, which is the heart of the system, the core of the system, and we'll also see that how to create new accounts and what are the things to keep in mind while creating new accounts. Okay, so I'm just going to quickly jump over to the posting groups, administration, financial management, VAT posting group. Okay, so as you see here, there are two posting groups, VAT business posting group and VAT product posting group. Okay, so the VAT business posting group, you can say that it is correlated with your general business posting group. You can see here there are three VAT business posting groups, and if you recall yesterday when we covered the general business posting group, we saw the same thing over there as well. So you have your domestic, you have your EU, and you have your export. So these things are correlated with your general business posting group. And also you have your VAT product posting group, which necessarily is going to be an item which is VATed, which will be taxed. And there, for example, in a country you have certain items that have 10% VAT and certain items that have 25% VAT. So you will create both of them in the VAT product posting group. Okay, so now this is dependent on what kind of VAT you have in your country for a certain type of products. So in Saudi Arabia, we have only one type of VAT. We have only VAT 5%. Okay, so naturally you'll have only 5% VAT. Okay, so no VAT means that this item or whatever is linked to this VAT product posting group is excluded from the VAT. Okay, it will not calculate any VAT for this item. Okay, so these are your VAT business posting group and your VAT product posting group. Okay, now the combination of these two will decide what is going to be VATed and what is not going to be VATed. Okay, so now here we can see that we have our VAT posting setup. So we have, if you remember yesterday how we discussed that how you can interpret these lines, that if my VAT business posting group is domestic or I'm dealing domestically and there are certain products that are not VATed, okay, that product, if you can remember yesterday, we saw that the items, the vendors, the customers, they all have their respective VAT posting groups. So the customers and the vendors, they have VAT business posting group, and the items, they have VAT product posting group. So here you can see that this is where you are defining that if my business, the transaction that is happening is domestic and the product that is being sold is a non-VAT item, then you will not calculate any VAT. So if you can see here, the VAT percentage is 0. So let's just open the card and you will see further. Okay, let it just open. Okay, so this is the VAT card. Okay, here the VAT posting setup card, and here is where you define different parameters. So here you're going to choose that if my VAT business posting group is domestic and my VAT product posting group is no VAT, then this is going to be a normal VAT. So we're just going to give it a normal VAT because we need to attach a calculation type, and the VAT identifier is what is going to be printed on the reports. So the VAT identifier, it should be specific to each VAT setup. Okay, and here down here you see that the VAT percentage is 0%. Okay, So this EU service is something related to the European setups, as we're not dealing with Europe right now, so we're not going to discuss anything that is related to EU. Okay, down under you have your actual accounts where if the VAT is calculated, it will be posted. Okay, so as we know that this specific posting setup is for no VAT, so you don't actually require any account to be attached to this setup. So it's not necessary to attach a sales VAT account. It's not necessary to attach a purchase VAT account. Okay, so this is done just to make it look good, because here you can see all the accounts are showing up here. So not just to avoid that that this area is not filled or empty, they've just attached it. Okay, so this is your VAT setup. Okay, and here you can see this is the counter used in ledger entries. So here you can see that where this VAT posting setup has been used. Okay, so if you just click on it, you will drill down to the actual transactions that have happened for this VAT posting setup. Okay, so this functionality was not previously present in the previous versions, so they have just added this. It's going to help for especially for the people who are looking to get reporting without running the reports. They just want to check where the data is being used. So this is particularly useful for those people, generally IT people or the higher management. Okay, then you have something called domestic and VAT 10. So here it automatically tells you that if the transaction is happening domestically and the VAT product posting group is 10%, that means that for this item the what you call the VAT product posting group is 10, which means for this item it will be calculated as 10%. Okay, so if you go there, you'll find the same setup here. You have your VAT business posting group, you have your VAT product posting group, VAT 10, and then you have your percentage down here, and it's also normal VAT. Here you can see that sales and purchase VAT. So why both of the accounts are added here? Because for this posting group is not specific to sales or purchase. It is specific to the transaction, what is happening. So if, for example, if it is a sales transaction, it will post the VAT for sales in this account. Okay, and you can see that this is also linked to your chart of accounts. Okay, and then you have your purchase VAT account. Obviously, it's quite clear that if any purchase is happening on this VAT posting setup, then the purchase will be the VAT for the purchase will be posted in this account. Okay, so this is the thing that makes all the difference. Okay, so this setup you should understand this setup. You should make sure that you don't mess up anything in this setup, because this is going to affect a lot on a company's reporting, because the VAT report is submitted at the end of the year to the government authority that is overlooking is looking after the VAT from different organizations. So you should make sure that your setup is right to the core. Okay, then there is something called export. So you should understand that there are 3 types of VATs. Okay, one second. Let me just open my notepad. Okay, so you have a transaction for export, you have a transaction for import, you have a transaction for domestic. Okay, so you should always understand that whatever you are exporting, okay, you're exporting something, you have to pay VAT for that. No, that is actually exempted from the VAT. So this is exempted from VAT. And this is also specific to your country rules. I'm just telling you about Saudi Arabia. Import, whatever you are importing. For example, you are importing a consignment of $10,000. Okay, so there is 0% VAT on that. 0% VAT. You don't have to pay any VAT for this import. But when it comes to the customs, okay, when you go to your your, for example, your customs in your city, or in the city where your consignment is arriving. At that point, you have to pay something called the clearance fee. The clearance, okay, there is a clearance agent, okay, and whatever this clearance agent is going to charge you, for example, he's going to tell you that on this $10,000 consignment, I'm going to charge you, like for example, $500. Okay, so this entire $500 is considered as a VAT. So you're not actually paying the VAT to your foreign vendor. You're actually paying VAT inside your country to this customs clearance agent. Okay, and he's going to take all of this $500, and this is going to be called full VAT. Okay, so this entire $500 is going to be full VAT. This is not going to be VATed like 5% or 25%. This is full VAT. So in your system, you should consider this as a full VAT. Okay, so how system, so okay, let me complete with the domestic. Domestic is also the same thing. You have your VAT percentage. Okay, maybe for example you have VAT 5%. Okay, and this is going to be calculated on your purchase and your your sales. Okay, so we're also going to discuss how you calculate that in a manual way, just to compare, but we're just going to quickly look at something which is very important. Okay, so I'm just going to, okay, right, so there is also one thing which is I'm going to configure right now. I'm just going to say that my VAT business posting group is domestic, and this is, I'm going to add here one more. It's going to be full VAT. Okay, this is my full VAT. Okay, so here I will say full VAT. Okay, this is going to be now full VAT. Why this is so? If, for example, my clearance agent I should create my clearance agent in my system. Okay, and once I choose this clearance agent, and he is a clearance agent, is attached to this setup. Okay, his VAT business posting product posting group is business posting group. Okay, so I need to add, sorry, one more thing. Okay, right. So here, if the clearance agent is full VAT and the product posting group is also full VAT, then this will be considered as a completely VATed situation. So all the invoice amount will be considered as a VAT. Okay, right. Okay, so one second. Okay, so this is how pretty much how the system works. Okay, right. So then you have what you call your, yeah, calculation of VAT. Okay, so in our scenario, consider that you're selling something of the price is $100. Okay, and with 5% VAT. So how are you going to go and calculate this percentage? Okay, so there are two things. Either this price is inclusive of VAT, or it is exclusive of VAT. So it's simple. You just, let me open my calculator. Okay, so for example, $100 is in our scenario is exclusive of VAT, and we need to add VAT in this. So you're just going to do a simple thing, and you're going to multiply this by the factor that it increases by 1. For example, if it is a 5%, then the factor will be 1.05. If it's 10%, it will be 1.1. If it's 25%, it is 1.25. Okay, so you're going to multiply this 1.05. So this is actually your VAT amount. Okay, so this is going to be after VAT. So $105 including VAT. This is your price including VAT. Now, if this price is, for example, you got the same price, okay, you got $100, okay, from your customer, from your vendor, sorry, and he says that this is inclusive of VAT, okay, then you will, how you will calculate this, it is by the same logic, you will just take your $100 and divide it by 1.05. Okay, so this is your amount excluding VAT. Okay, so this is your price of the item, and with additional 5%, the price becomes $100. So this is how you calculate. Okay, so the system follows the same logic, and it calculates the VAT on this logic. Okay, right. Any questions so far?
No.
Okay. Right, so just going to go to financial management, general ledger, chart of accounts. Right, so this area is, you can consider as the heart of your business, the core of your business. Without that, without this chart of accounts, your system is good for nothing. Okay, so we're just going to open this card and we're going to discuss whatever is in here. Okay. So number is quite clear. This is your primary key for this table. Okay, the primary key is the identification of that table, and for in our case, the primary key is the number. So in other words, no two numbers in the chart of accounts can be same. Okay, so it is an identifier, a primary key. Then you have your name, the name of your account. Then you have your income statement or balance sheet account. So every account in your chart of accounts should be either from your income statement or from your balance sheet. Okay, so generally your assets, your liabilities, and your capital is from your balance sheet accounts, and your revenue and your expenses are from your income statement account. Okay, and then you have your account category. This is another sub classification of your accounts. So you can identify that these accounts fall under assets, these fall under liabilities, these equity is just the other name for capital. Okay, owner's equity or capital, you can call it anything. Then you have your income. Income is another name for your revenue. Cost of goods sold. If you want to divide your revenue in cost of goods, or sorry, your revenue into cost of goods sold and income, then this is how you do it. Or you can have it in the same category. Okay. So you have your income, you have cost of goods sold, and you have your expenses. Okay. Then you have a further categorization. This is also another way of for you to subcategorize your accounts, and this is completely if the accountant wants to create more subclassification of their accounts, they can do it here. Okay, if they're not satisfied with these classifications, they can create their own classifications. Then you have something called debit and credit. So what this means is if you have selected either of the two second values, for example, debit or credit, you can only do the same thing with this account. You can only debit this or only credit this account. So if, for example, somebody chooses this account and they're creating a new JV, they're creating a new entry, they select this account, and if it is marked as a debit account and you credit this account, the system will pop an error that you are not allowed to to credit this account. Okay, so generally we keep all the accounts on both just to avoid any issues in the working or the operations with the users. Okay, so you have the account type now. So this is one of the most important things on this card. So if you can see here, you have your posting, you have your heading, you have total, you have begin total and end total. Okay, so now is I think the good time to discuss first of all the numberings, and then we will go and discuss about the account type. Okay, so numbering, how it works in Navision, what is the best practice in Navision is that begin total is once a category. So you can see that begin total and end total is your main categories, and under that you have your posting accounts. So for example, I'll say that 1000 is my assets. Then I have 1100 as, or let me just give it some more units just to make sure that we have enough room. Okay, so you have your current assets, you have your 1200, you have your non-current assets. Okay, so these are the categories in assets. Now under current assets and non-current assets, you need to do further grouping. So in the current assets, I will say 111000. I have my cash at bank. Then I have 112000. I have my cash at hand. Okay. Then in the non-current assets, I have my 121000. I have my fixed assets, and so on and so forth. So I will say that 122000. I have my accumulated depreciation. Okay, so on and so forth. So if you can see here, if you can follow me, we are following a strategy. So one is asset. Anything that starts with one is an asset. Okay, and under that we have for the classification, we have our current assets that fall under this is a separate criteria. So I'll say that this is my either it can be a heading or a begin total. I prefer a begin total. I'll say begin total. Okay, this is also a begin total. This is also a begin total. Now here I need to actually say that which account am I talking about. So I have my account at National Commercial Bank and 111200 Arab National Bank. Now, if you can see here that this actually falls under this. Okay, so these two are these two are part of this account. They fall under this. So naturally, if these fall under this, I need to close this group. So if I want to close this group, then what I will do is I will follow a strategy which is two. Okay, we'll say 099. So 99, this is an end total. You're actually closing this group. You're closing this group here. Okay, but you're giving a margin that if more accounts need to be created in this, after, for example, after Arab National Bank, you create more accounts, then you can have it until 099. Okay. So here, what I'm going to do is 1, 2, and also make it 1, or yeah, make it 0. No issues. So this will close this group. Okay. Now I will name it the same as this one, just to make it okay. This, and I will call this as end total. Okay, now this begin total and end total is going to be used in reporting. Okay, this will make your chart of accounts reporting as, for example, anything that falls under this group, I need to report for that. Okay, so you will use the begin and end totals to run your reports. So under anything that falls under this will be considered in the report. Okay. So now the system, once you finish this, okay, and also let me say that at cash in hand, you will say I have 112, sorry, 112,100. You have petty cash. You have 112,200. You have your cash with accountant. Okay, so this is another group. Now I need to close this group. Naturally, what I will do is 1120992099, and I'm going to call it the same as cash at hand. Okay, and this will be an total. Okay, so this is a begin total, and this is an end total. Same way you're going to continue. Now, if for example I have closed all my current accounts, what I will do is I will close this category. I will say that my current assets was 110099. So this, what I'm doing here is I'm actually closing this account. Okay, this category. Now this is the major category. Okay, now assets is the main category. Then you have your current assets. Under current assets you have cash at bank, cash at hand. And now I'm closing the current assets because now my non-current assets need to start. So what I'll do is I will just take the same name. Okay, copy, go down, paste, and I'll name it as and total. Now this closes all my current accounts. Okay, so this, if I run the report for here, it will actually take into consideration all these accounts. Okay, and the same way it is about the non-current assets and XYZ. Okay, so this 9 actually, any account ending with 9 is going to be your end total account, and this is the strategy we follow. This is not a hard and fast rule, but this is a strategy that we follow to streamline our chart of accounts. Okay, and we usually recommend that the what you call the users or the client to follow the same strategy in order to make their life easier once it comes to reporting. So here we're just going to now discuss about the account types. As you know, I hope you know about the posting accounts, the heading, the total. You know about the posting and the begin and end total. The posting is actually now anything that is a begin total and an end total. You cannot post any monetary value in that. You cannot pick this account and do a debit or credit for this account. So this will it will not be accepted by the system because this is not a posting account. Actually, these accounts are your posting account. Okay, these are used for posting. Okay, any debit or credit you need to do, you will do in these posting accounts. Okay, so these accounts are used for posting. Okay, and these accounts are not used for posting. So you cannot do anything in the end and begin total accounts. Okay, so once you're creating a new account, you need to mention that either this is a posting account, a begin total account, or an end total account. Now, what are heading and total accounts? These two accounts are not too much used. This is also, it comes down to a personal preference. But if you can see here in the demo database, they have actually created the balance sheet account as a heading account. What this means is, in your chart of accounts, as we discussed that you have either your balance sheet accounts or your income statement accounts. So just to mark the beginning of the balance sheet accounts and the beginning of the income statement accounts, you use heading accounts. They have no impact. Okay, you cannot do any debit or credit in this, and these are just for reporting purposes. These are just for making the chart of accounts look good. The heading accounts, they don't really have any purpose. Okay, so you can always use your begin total or end total. This is going to suffice you. The total accounts, again, these are used if you are not, if for example, if you want to total something, okay, without creating a begin total and end total, and you want to total some accounts. So what you will do is you will create a total account. It will total everything above it. Okay, so all the accounts above it, it will total them. Right. So the other thing is, okay, let me just open this. Okay. Right. So other thing is your totaling. This totaling is, you know, this totaling will show you that, for example, once again, let me show you, totaling. Okay, this account. You see, this account has a totaling. So this is an end total account, and every end total account will total all the accounts that fall under the begin and end total of this. For example, I have the land and building end total, and this will include anything that includes in that category. So you have from 1100 to 1190. We can see that from here, land and building, it is totaling until here. Okay, so these all accounts are totaled in this account. Okay, right. So then you have the balance. Okay, the balance is what this account currently holds. Okay, then the most important thing I need you to focus on is this direct posting. So if you remember that in your posting setups, you have actually attached some accounts to the posting groups, okay? And those accounts are used by the system to directly post in them once a transaction happens, okay, based on the setup that you've done. So if some account is marked as direct posting, what it means is that an accountant will be able to pick this account in the JV. Okay, he would be able to manually debit or credit the account, and he'll be able to do posting in that account. And being a company, I want to avoid any type of misreporting or erroneous posting in the accounts that are used with by the modules of my system. So if I take away this direct posting, the user will not be able to pick this account and manually debit or credit or whatever that. So he will not be able to post directly in this account. He should go from the module and do the transaction from there. For example, if this is, for example, let me show you. If this is a customer's account, I need to see. 1 second. Okay, so if this is a customer's account, okay, and I don't want my user to manually change the balance of this account, I will take away the direct posting. I will not check mark this one, so he will not be able to directly post